Andrew Garthwaite over at Credit Suisse, the strategist there. So this is more of a strategy call than a single stock call, but he's looking at the potential for a bubble in U.S. stocks. He says there's a 60 to 70% chance that a bubble could form in the U.S. He says central banks will likely keep policy abnormally loose, and he looks at the last two supply-driven oil shocks and said there were bubbles after that. So there's a risk here that a markets could correct 2 to 9% after the first Fed rate hike. That's something a lot of folks have talked about. Again, that 60 to 70% chance. However, he says we are not yet in a bubble. He's looking at a number of different indications, but one of them is valuation. So if you look at my Bloomberg terminal, I have a graph of the S&P 500 versus its forward price to earnings ratio. The price to earnings ratio is these orange bars here. The S&P is the actual white line that you're seeing that's been going up and up. And he says historically when the PE, the forward PE tends to get more towards 23 or so, that's when you're looking at potential declines in stocks. You saw it happen back, say, 1999 when you saw an elevated level. But if you look way over here, we're not at that elevated level in the PE right now, in the forward PE. So he says that's one of the reasons why he's not as concerned. Of course, the key word here is yet. There's not that bubble yet.